Hi guys, welcome to another episode of Finance Talk, where we speak about finance, business, and investing. I'm Eugene. I have more than 10 years of experience in business. I also interested in finance and building my own portfolio and hoping to set up a fund in the nearest future.
And I'm Nick Rational. I too have a lot of business experience and been doing the investing for a while now. Together, we're going to share with you what we have learned, and together we can all learn more and become greater investors. I too hope to start a fund in the near future, and let's all learn together.
So, what will be our today's topic, Nick?
In previous episodes, we've discussed how management of our companies that we invest in should spend the capital that they have and how they should manage their money, both how they should raise money and how they should spend it. In today's episode, we start a new topic, how we as intelligent investors should spend our money. When is it okay to invest and in what? How to do so, and also how we should manage our money in other ways, how we should think about debt and those kind of things. So applying the same kind of questions that we did to managers of our money, CEOs of our companies, now we apply it to ourselves. So what do you think of that as a good topic for today?
I think this is the great topic for our viewers and listeners, because at first you need to have the special mindset in order to change your world and change your life. When you do it, everything will change accordingly. Wealthy and successful people have the different ideas inside their heads and different mindset, and as a result, their actions are different.
So for starters, I think a good starting point would be to clearly define the difference between things that people consider investing or close to investing, or to differentiate them very clearly. Because some people, when they're doing things in the stock market, even value investing, their friends might say, "Oh, you're taking a bit of a gamble," and so sometimes investing is called gambling. And sometimes people are doing things that I think fall under the definition of speculating, and they call it investing. And other times it's another term which is called arbitrage, and people might consider that investing. So we're going to discuss the differences between gambling, speculation, arbitrage, and investing. And I think each has a very clear, separate definition, and I'll work our way through them and see what we make of it together. For starters, a very good definition, I think, to know if you're gambling or not is if it's a high risk activity with a high likelihood of losing your capital and very high returns. So you've got a high likelihood of losing everything and very low chance of returns, but very high returns. That would be gambling. So for example, playing the lottery, you've got a very high likelihood of losing your money and a very low chance of winning a lot, but it is a lot. So that's sort of a loose definition of gambling. What do you think of that?
Yeah, when people play such games, I agree that this is the speculation or just gambling. Closest thing in the stock market, which is like the gambling, where your chances are low than your outcomes and your results, can be stock shorting. We will discuss the whole idea of shorting in our next episode, but for today, what you need to know is that when you short the stock, the chances that you will receive 2x is sometimes not so huge, but the chances that eventually you will lose all of your money is quite large. So as a result, the highest thing which you can get is 2x, and the lowest thing is you can lose your money. And most people just play that game. As Warren Buffett says, I do not know anyone who created the huge fortune and wealth based on shorting.
shorting is indeed a big topic, and we will do it in a very soon upcoming episode. But just to clarify, the original quote paraphrased is something along the lines of your biggest return would be to double your money, and your worst outcome would be that you yourself would go completely broke, and that means an infinite amount of loss is possible. So even if you are, shorting a company for $1,000 and you've got 100,000 net worth or a million net worth, you could lose your full million. Shorting has an infinite downside potential, and so stay away from shorting. And we'll go into shorting in a future episode. Final thoughts on the gambling side of things. I thought of an additional thing to add to the definition. With gambling, you typically can figure out, or look up your exact odds. So you know the specific chances of you losing your money versus you winning money. So it'll be 1 to 25 or 1 to 17 million chances of winning, and you'll know your odds with gambling. And that, I think, differentiates gambling from the other types. What do you think of that as a final wrap up on gambling?
If you consider yourself a value investor and as an investor, the great approach, I think, is a proper approach. So when you have the limited amount of risk, and this risk is really calculated based on your predictions of the potential cash flow, of the economic mode of the company, the management skills, and all this stuff, the upside is unknown by you and by the market. As a result, you will stay on the same position when you invest your money, but you have unknown outcome in the future. Stock market doesn't like uncertainty. As a result, you can be rewarded and your risk is protected.
So we move on to speculation, which is when you don't know the underlying value of what you're purchasing. So you don't know if it's at a discount, and you don't know if it's on sale, and you don't know if it's a wonderful thing. All you're doing essentially is you are speculating that someone will buy this thing at a higher price later than what you are buying for right now. So that would include things like buying art or coin collecting or any other kind of collectible, really. Bitcoin and other crypto would fall under speculation because we don't know their underlying value. It's impossible to determine any value, really. It's just what people think it is from time to time. So you're speculating that it's going to go up. Gold would fall under that banner. It's still speculation. There's no intrinsic value. And likewise, modes of investing, or not investing, modes of, see, I even fell into the trap. Modes of speculating would be things like day trading, technical analysis, that kind of thing. They make it sound very scientific, but the truth is they're trying to predict the unpredictable, and they are speculating. And even if the odds are ever so slightly in their favor, or statistically they're right more often than they're wrong, you are speculating. Your capital is at risk. You don't know the underlying value, and you are speculating with whatever degree of certainty you're speculating. You're speculating that the price will go up and someone will buy it for more than what you paid. What's your thoughts on speculating?
Most people who speculate have different mindset, and they think that buying the stock in the morning for $100 and selling it in the afternoon for 120, paying the taxes, will be okay. But actually, if we consider this from the value perspective, from the ownership of the business side, this is a zero-sum game, because when you issue the stock, you consider to attract money in order to purchase more goods, produce more services, and produce more value to the market. And you cannot do that instantly. And when you invest in the company for the long term, you actually invest your money and you produce the value to the market and to other people investing in the company. But when you trade, you actually pour in and pour out the capital in the short period of time, and you do not allow the company to use this money for the good. and for the benefit of the society. That's why this is the zero-sum game. And as far as you understand it, I would probably assume that it is better to be a value investor. This is the end of this episode, guys. We will continue next time. And if you have any questions, please write them down in the comments below. And see you next episode.